Welcome everyone to Vested Interest. This is Shane back again for another week. It is May 8th, Monday, the beginning of a new week and the beginning of a new Stock Pick of the Day series. Today we are going to cover Tyson Foods. Let's jump right in the video. So Tyson Foods is out of the consumer staple sector. You can see a lot of their brands, obviously Tyson, right? Hillshire Farm, Jimmy Dean's, Ballpark, Barber Foods, Reuben, Brian. A lot of these you're probably familiar with. Original Philly, uh, Star Ranch Angus, Bosco's, Wright Brand, Roasted Rooted, Adele, State Fair, Nature Raised Farms, Sara Lee. I mean, these are all pretty Landshire. I mean, a lot of these are just household names. Ballpark, especially Hillshire Farms, Jimmy Dean's, Tyson. Excuse me, probably the main ones that you're aware of. But a lot of companies under their umbrella or name brands under their umbrella. It started back in the 1930s. The Tyson Food Story begins during the Great Depression. In 1931, John W. Tyson moves his family to Springsdale, Arkansas in search of new opportunities. He finds them, thousands of them, all feathered and squawking. He begins delivering chickens to larger markets in the Midwest. So that's how they got started. Well over 100, well, just about 100 years ago now. 90 something years ago. So they've been around through it all, right? The Great Depression, recessions, multiple wars, and come out the other side. Probably going to make it out the other side here. If you want to know more about them, check them out, www.tysonfoods.com. That is their homepage where I pulled this information from. Now, why we are taking a look at them today, down 16.41%, massive drop on the day. We are talking about Tyson Foods, ticker TSN, again out of the consumer staple sector. Closed the day out May 8th at $50.73. 52-week range as low as $50.02, as high as $94.77. Definitely right up against that 52-week low there. Average volume 2.8. Today's 25.1. Lot of selling today, right? Just a steady down 16.41%. That is just astronomical drop on a single day. Market cap 18.041 billion. Today's the beta, this is volatility of the market, right? As compared to the market 0.74, so they are less volatile than the overall market, even though I would say that's a lot of volatility for one day. PE ratio, price to earnings there is $7.54 per share. So that's pretty low. EPS, earnings per share, is $6.73. That's actually pretty high. Earnings date May 8th. That was today, and that they did have a miss on earnings. I did catch that news today, so that is the reason for the big drop. But man, what a drop. For dividend, $1.92 paid out on the year. They do pay out quarterly, so divide by 4 there. We will see that here in a moment, what they pay per share each quarter. And a nice dividend yield, 3.16%, probably because they're down so much. Again, ex-dividend date coming up May 31st, and a one-year target, at least according to Yahoo Finance, of $66.78 per share. So speaks to some potential upside appreciation. I like to jump into the statistics and look at dividend yield theory. That's one of the metrics that I look. You'll see that at the end of the video if you stay tuned for the whole video. The 5-year, what you do for that is you compare the 5-year average of 2.27% to their current dividend yield, 3.16, or over here what they call forward dividend yield, or 3.16. They match, so same number. And if this number, the forward annual dividend yield or current dividend yield, is higher than the 5-year average, which it is, that speaks to undervaluation. If this number was lower, then it would be potentially overvalued. But this speaks to some potential undervaluation currently for Tyson Foods. And another one I like to get into, you go into the financials, make sure you check up the health under the hood of the company, check the health of the company. You're looking for growing revenue. You're looking for assets over liabilities, more assets than liabilities. You're looking for them to pay down debt. You're looking for repurchase of shares. You can see that here. They are repurchasing their own shares. And free cash flow over time is another one that you can find here. Free cash flow is what they pay the dividends out of. So you want this growing over time. So you can see in 2019, 1.2 million, 2020, 2.6, 2021, 2.6, about flat, a little bit down there. But this is the one that concerns me. 2021 to 2022, 2.6 million to 800,000. That's a huge drop in free cash flow. That's a bit concerning. Excuse me. And it currently, year to date here, it looks like they are negative free cash flow. That's concerning. So the free cash flow is a bit concerning currently, at least in my opinion. Everything else is looking pretty good, at least so far. Now, another source I like to look at other than Yahoo Finance is stockanalysis.com. I always recommend more than one source so that you can back check your information, at least 2, preferably 3 sources, so you can make sure the information you are getting is accurate. And Stock Analysis has 9 stock analysts that have taken a look at this. They call it a consensus hold. And with the volatility they've had recently, I can understand why. But they have a low estimate of $56 per share. That would be a 10.39% increase in the stock price. It currently sits lower than their lowest estimate. They have an average price target of $66.89. That's pretty close to what we saw from Yahoo Finance on the previous page. That would be a 31.85% increase in the stock price. And they have a high estimate of $87.27. And if they happen to hit their high, that would be a 87.27% increase in the stock price. All the while, you could collect that 3+ dividend yield, or at least that is what it's at now. Now, this gives you a lot of the same information as Yahoo Finance, just in a different manner. Financials, same thing. Statistics, forecast, the one we're looking at here. The dividends paid out, we'll see that on the next page. The statistics is one I like to look at. I'm looking at return on equity, that's ROE, and return on invested capital. I like 10% or better for both of those, or in line with their market standard or their business, comparable businesses, right? Both of these are above the 10% that I look for. Return on equity is sitting at 12.50. Return on invested capital is sitting at 16%. So both of those numbers are very nice. So far, all that I'm seeing really that jumps out to me is the free cash flow is not looking good. Now, this is where I would show you if I have a position. I do not have a position in Tyson. It is one that's on my watch list for the right price. It does have some dividend growth, but it's slow grower, 3.87%. It has a low payout ratio, 26.80, although I would question this and make sure this is accurate. I think we saw it on the first page. It is around the same as what Yahoo was spitting out. So that may be accurate, but the free cash flow is the one I would watch and make sure that this doesn't jump up based on low free cash flow. And as I said, they do pay out quarterly. And they pay out 48 cents per share. They recently raised it back here August 31st of 2022. They were paying 46 cents per share, and then in November they raised that up to 48 cents, and they've been running that 48 cents ever since. So that is Tyson Food Company. I really don't know what to think about this one. Huge drop on the day. All the metrics that I usually use are in line except for free cash flow. And let's jump over to the next page. These are the metrics, my investing criteria metrics right here. The first 7 are for all companies. I add the last one, price to book, for financials. You could use price to book for all companies, but price to book is more important for financial companies, right? So 4 of 7 for a non-financial company and 5 of 8 if it is a financial company. You can pause this and read through these. Again, that is Tyson Foods. These are supposed to be quick hitters, trying to find value in the market. Big drop on Tyson Foods today on a earnings miss. So might be worth taking a look at, might be presenting some opportunity here on this one. I would just watch the free cash flow. If you do jump into this, make sure you are aware their free cash flow has been down, was down last year, and it looks like it's in the negative currently. So that is not a good sign. You want to make sure that that free cash flow is growing over time, and with the earnings beat, that is not a good sign either. Though it may be presenting an opportunity with a recent issue that might not be a long-term issue. But again, do your own research. Make sure that you are adequately investigating and doing research on these companies that you are interested in buying. Don't just blindly invest in something because it dropped 16% on the day or because someone on YouTube suggested it, right? It is on my watch list. It is not one that I'm looking to add to right now. I'm looking at other positions to fill out, but it is looking interesting, especially with that 16% drop. I did cover it a couple months back when it was closer to its 52-week low. Now it's right up against it. So it might be worth watching and doing a bit more research on your end. I do think if you were to get it now, it's probably presenting more fair value than it has recently, because it did run back up a bit. But like I said, with that big drop, it's back towards its 52-week low. So there you go. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded investors so that we can share our experiences, stocks we're watching, stocks we're avoiding, stocks we're selling, stocks we're buying, stocks we think that might be presenting fair value, or just information around stocks in general that we can share. That's what we want to do here. Dividend growth investing is the name of my game. That's what I'm interested in. Go ahead and drop a comment. Let me know what you are investing in, what you see fair value in, or even below value in your opinion. Go ahead and drop it all down in the comments section below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have some stocks you'd like me to cover in the Stock Pick of the Day series, go ahead and drop them all down below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in your presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount you're uncomfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.